Hello, everyone. Once again, I am your host and moderator, Preeti Devakar. Thank you for taking out time to join us today as we talk about how to create a star stock portfolio. Today, we have Mr. Abhishek Kumar, managing partner at Ingenetus, with us today to throw light on the topic. On this topic, he is having more than 10 years of experience in financial planning and wealth management. Thank you, Mr. Abhishek, for joining us.
Hi, Preeti.
Nice. I would like saying that thank you so much for joining us. Am I audible properly to you?
Yes, you're audible, Preeti.
Okay,
Thanks for
thanks.
moderating the session, and thank you everyone for joining in today.
Thank you. So, as we commence the session, we have been value of 60,000 Sensex level. It went up to 52 and then again came back to 60. So, what is your point of view at Sensex and what do we can expect next? Mr. Abhishek, am I
Thanks.
audible?
Yes, you're audible, Preeti. Your voice broke a little in between. Let me just start off with the what we expect from the markets going forward, and what are the areas of concerns, and what are we looking at. So, crude oil is one factor which is playing in the market. What's happening with the crude price going up? The expectation is that, or what the market is expecting is that it will hit the earnings of a lot of companies with commodity prices and crude mainly going up. But what I feel on the earnings part is that the commodity pricings will impact some of the companies which act as inputs for some of the companies. जहाँ पे the commodities act as an input or a raw material for companies, there it will benefit, but where it's an output, there it will be a loss, right? So it will kind of average out between the companies, the commodity pricing. So I don't think that's too bigger factor to look at the moment. It can cause a little bit of knee-jerk reaction, but not a major dent or anything in the markets. Um, Apart from that, what concerns me, or what the data I'm looking at is mainly the U.S. Fed, because they are coming up with a statement almost every 2 weeks or 3 weeks regarding the inflation over there. Um, there are talks about a 0.5% increase. Then they've in the March, the meetings, the minutes of the meetings which came out in March, they have said that they will consolidate the uh, the the liquidity that they were putting in by about $95 billion a month. So the pace at which they consolidate is something to be looked at. Uh, so I want to look at at what pace they increase the rates, because all of us feel that, at least I feel that they've been a little late in reacting to the inflation, because earlier on they were looking at inflation as a transitory inflation which should settle down, but it did not. So the pace at which they will increase the rates, the pace at which they'll tighten the liquidity is something to look at, and markets will keep on reacting to that. Uh, Most of the outflow which has happened, I think bulk of the outflow of FI has already happened in the first half of the year, and will continue till about the middle of this year. But earnings and crude is not that much of a concern. I feel crude ke liye we have a lot of positive factors, like it's summertime in the west right now, so the demand itself will go down a little bit in the coming few months. As demand will go down, crude prices apne aap it will come under control. Then we have Venezuela, who's stuck with a lot of sanctions. So if there at all the Russian oil goes out a little bit, then Venezuela's oil is there to take care of it. So I feel, and also the Ukraine Russia has already started de-escalating a bit. So I feel during the next few months you will see crude settling below 100, which is a decent number to have. Uh, the Fed rates, yes, have to be looked at, and we have to plan accordingly. The portfolios as well as according to the market. Uh, but I feel during the second half of the year, markets should kind of recover back because crude by that time would have settled. There would have been a few rate hikes which would have happened. They would have consolidated. The US would have consolidated the balance sheet for a few months by $95 billion, and inflation will numbers will start looking better for the US. So I feel the second half of the year uh, should be good and little less volatile as compared to the first half of the year. But yeah, these are the two data points that I'm looking at the moment.
Great. Thank you so much for your input in the market, because when we create a stock portfolio, we should look
You are
it's
breaking up.
important to understand the market and what factor which might affect my stock portfolio. I should be aware about that. So thank you so much on that part. Coming to my second question, when our stock portfolio is being created, we should look upon the asset allocation, which we
Preeti,
also
your voice is breaking up a little bit.
set this to our clients when we make their portfolio. Properly, am I audible?
Yeah, so I think VP has there's some network issue. So I'll come to the topic that we have to discuss today, which is about the stock portfolio and what we look at while designing the stock portfolio. Uh, so I've given you a market update of what we are looking at the markets. But looking at the stock portfolio, when we shortlist stocks, there are a lot of factors which are very important, and there are a lot of mistakes that all of us do while creating that stock portfolio. So I'll highlight what all has to be looked at and what all mistakes we can avoid while creating a stock portfolio. Hi Preeti, I think we lost you there. Your voice was breaking a lot, and I think then you logged out.
Yes, thank you so much for waiting. There was some internet connectivity problem that I have resolved. May I continue with my question?
Yeah, please do.
Okay, thank you. So for I was thank you so much for your input on the market, which we required to when we create our stock portfolio. I was coming to my second question, that how our asset allocation be while we decide the companies or stock that we should be taking our stock portfolio. So what is your view? How should we decide how much large cap should be in my portfolio? How should small cap should be, or how much mid cap should be in my portfolio? What's your viewpoint on that?
See, when I build my portfolio, I don't look at large, mid, and small individually. What I look at is good stocks. It's a bottom-up approach rather than a top-down approach. So a bottom-up approach is I'm selecting stocks first of all, and those stocks will build up my caps as well as my sectors. Rather than doing it the other way around, where I look at caps and sectors and then look at stocks, I look at stocks first and good quality stocks. Now, in a stock analysis, what I do, should I answer that also in this question only?
Yes, we that would be
Okay.
good.
So when I'm looking at stocks, there are a lot of factors which I look at. Uh, so I look at the financial durability of a company, in which, for me, a company should be a vintage company, at least a 10-year-old company, if not more. Few calls I can take below 10 years as well. But why 10 years is because in that 10 years, that stock has undergone a lot of cycles. It has seen ups, it has seen a down cycle as well. Also, in longer period, we get to know a lot about the management. Uh, how they react to different market scenarios, how they react to the down cycle, how they react to the up cycle. So we get to know a lot of about the management. So vintage is one thing I look at. I look at financial durability. So I look at their their profit making. For me, a company should be profit making. Only then I'll pick it up. If it's a loss making company, I'll not pick it up. Profits also then is divided into two parts. One is a net profit and one is a operational profit, right? So operational profit is the core business that the company is into. So are they generating good profits in their operating profitability segment in their balance sheet? Are they generating good positive cash flows? Are the cash flows positive for them in both? So I don't look at net cash flows. I look at operating cash flows more often, because net cash flows can be a little negative for a company if they are expanding or if they're doing a capex. So they can utilize a lot of cash that they're generating. So, but at the end of it, their core business, which is their operating profit, should not be negative, right? It should be positive. We can have a year or two in between, but generally I pick up companies in which the operating profit is positive for at least 3 to 5 years, right?
Right.
Then, very important are two aspects, and they're related to the aspect which I just discussed. One is the return on equity, and the other is the EPS, the earning per share. So, if a company does well, if it's doing well up in their operational cash flows as well as profitability, they should be able to generate return on equity for their promoters, for their equity stakeholders, and also they should be generating earnings per share, which should be high enough for their shareholders in general, right? The public shareholders as well, not just the promoters. So a company which does well or has a good business model, is profitable, will always be good on return on equity as well, and as well as on earning per share. So I look at those figures as well. So, and there are of course a lot of other balance sheet figures which I look at, which I, if I go in a lot of detail, which will take a lot of time. So this is what I look at on the financial durability side. On the valuation side, then I come to valuation. So one can be that the company is very strong on the balance sheet, doing very well, generating very good profits, very good ROE, very good EBITDA, but the stock can be very expensive, right? Um, and I don't want to enter into a stock which is too expensive. I want to enter into stocks which are anywhere between medium to low valuations, right? So I look at companies. I try to pick up companies which are less, are not expensive, are cheaply available as far as the earnings are concerned. They are available at a cheap price. Uh, and I also do a little bit of future discounting of price in that. So I look at their cash flows and their earnings in the next 5 years, determine what cost they should be at, and whether they are available at a lower cost or a higher cost than that price that I found out, right? So valuation for me becomes very important. Then on the third end, I look at the momentum in the stock. I look at the technicals of the stock. It can be that a company is very good on the balance sheet, is cheap as well, but the stock unfortunately has not rallied due to some factors or the other, right? So I have to look at the moving averages of the stock. I have to look at the MACD lines. I have to look at a lot of other factors on the technical front uh, to check how the stock is technically placed. And after these three filters are done, I also look at, and that's not a filter to shortlist the stock, but that's just a comfort factor. I look at who all shareholders are there, if public shareholders are there, which all public shareholders are there, how much promoter holding the stock has, and then kind of do the analysis and shortlist the stock.
Noted. So, if I sum up, there are the three major factors that you consider while you shortlist your stock. Is very first is the durability, which tells their financials about the financials of the company. Second factor that you keep in mind is the valuation of the company, and the third factor is that momentum of the stock which you have taken. Am I correct?
Yes, correct, Preeti.
Okay. So, I also would like you to throw a little bit light upon the caps, the large cap, mid cap, small cap, because we have observed that many people are comfortable with the large cap stocks. They skew their portfolio towards large caps or mid caps instead of small cap, but they want to generate an alpha in their portfolio. So how one should manage their portfolio when it's come to diversify their portfolio into caps? Can you have share some viewpoint on that?
Preeti, as I told you, I don't look at caps, but uh,
Hmm.
so I look at these three factors, and then what
Hmm.
I do is I look at so I put a filter of market cap which is greater than 100 cr. So any cap will
Hmm.
work for me, right? So if I get any large cap company in this factors which I have put, I can take a large cap company, I can take a mid cap, I can take a small cap. In a longer duration, generally the small cap will always give you a better alpha than large and mid. The reason of that is very simple. When you're investing in a small cap company and keeping in mind that you've analyzed all the factors which I just told you, you are identifying a company pretty early in its business cycle, right? You're not identifying it at a time when it has become a bigger company or a mid-sized company. You're identifying it when it's a small company, and the potential
Hmm.
of growth on all the factors, the turnovers, the market cap, the EBITDA, the profits, is is huge, right? So I can expect a 10x growth also from a company if I'm picking a small cap, but I cannot expect that uh, from a pretty large company, right, in a short period of time. So when I'm looking at caps, I am not considering large, mid, or small. I put a filter of 100 crores and 100 crores plus, and any company which falls into my parameters, I'll pick it up.
Noted. Thanks for your feedback on that. Coming to my next question, which many people have that in mind, which sector should be selected in 2022? So they have seen the 2020 where the COVID was on the high peak, then in 2020 when they saw the recovery, and 2022 they saw the Ukraine Russia war. Now what sector they could look upon in 2022?
So, sector-wise, pretty financial and banking sector, the housing finance sector companies look good. They've not delivered a very good return for a long period of time. Power has not generated return for a long period of time. Automobile have not generated a return for a long period of time. So all of these sectors look good on the valuation front. But as I told you, whether I'll pick up these sectors or not completely depends on the stocks that I find, right? So if I find good stocks, I'll build up these sectors as well. I don't do a top down; I do a bottom up. So for me, what as of now, the sectors which are valued correctly or are undervalued at the moment are these sectors: banking and financials, and the NBFC space, the housing finance space looks good at the moment. But predominantly for me, for my portfolio, generally chemicals have done well. Transport and logistics have done well. Uh, then on the other hand, some IT companies have done well. So for me, particularly the commodities, the metals, metal stocks, then a bit of chemicals. They've done well for my portfolio at the moment till now. But if you're looking at the future, then these sectors which I mentioned have the potential. But again, as I said, I look at sectors later on and look at stocks. So if I find good stocks in these sectors, I don't mind picking it up.
Yeah, no, noted. May I know your viewpoint on the IT sector in India and IT sector in US? What will your viewpoint if you have to invest in India in IT sector, technology sector, and in US? Which will you prefer and why?
So see, IT sector in India and US are very different. The Indian IT sector is more of IT services, and the US IT
Hmm.
sector is more of product development, right? Uh, if you ask me, I like the US technology sector to better than the Indian technology sector, because at the end of it, the Indian technology sector is also, because it's IT services, it's also dependent on a lot of US companies and the US markets, right? Uh,
True.
then the size of the companies are pretty huge, pretty different. Like for example, Apple has a market cap of almost 3 trillion, right? We don't
Right.
have that bigger companies in India on the IT side. Forget about the IT side. We don't have such bigger companies in India at all. So when I look at IT sector particularly, I like US better. But that being said, IT services in India are also all right to pick at. But if you are asking my preference, then I look like US IT sector better.
That great, thanks. Coming to my next question, which is a very important question when we make our stock portfolio, is when should you exit a stock? When is the point where you should exit from stock and book the profit? Because when market is on bull run, we feel कि अभी थोड़ा और wait करते हैं, then we'll exit, and at that time we sometimes miss out on the profit also. So what's your viewpoint on that?
So this is a very interesting question, and a lot of times I have a lot of uh, discussions with my investors and people I know a lot as well. Few points I would like to suggest, and I'll answer this question in two parts. Uh, I like to also address how you should invest into stocks, or what should be your strategy of investing, as well as a strategy of exit. So let me just cover both. Uh, so if you're asking me the strategy of exit, first of all, I have a set of parameters. If any of the parameters doesn't work out, I exit the stock. Right? It's as simple as that for me. Uh, as long as that particular stock that I've put and the filters that I've put, let's say I need a ROE of more than 10%, or I need a EPS of more than 15, or whatever factors I've put in. I generally put in about 20-25 factors, and as long as that stock is in that factor, it's fine for me. As long as it moves out in any of the factors, or in any of the three top factors which I told you, which is financial durability, valuation, and momentum, uh, I generally exit the stock, right? Uh, and that, see, that can be on both sides. It can be a stock which I've exited on a loss. It can be a stock I've exited on a profit. So I don't mind doing both, as long as my overall portfolio is increasing. So generally, when I build my portfolio, I build at least 25. I take at least 20 to 35 stocks. That's my range, which I look at. So even let's take an example of 30 stocks portfolio. Then per stock I have approximately 3%. Right. So even if a stock tanks or goes down by 10%, my overall portfolio has gone down by just about 0.3%. So it doesn't bother me that much to book a loss as well. So as soon as the factors run out, let's say the valuation of a stock becomes very expensive, it can happen that the stock has rallied so much that the earnings are not supporting the stock price. So the valuations have gone out of hand. I'll exit the stock. It can happen that the earnings have not come up well. Now, in that, I have to look at the sector-wise earnings as well, whether that's in that particular sector, whether that's the only company which is not doing well, or the entire sector has been hit due to some reason. And if the earnings are not great, if they are not generating operational profit, or they are not generating good profits, I'll probably move out of it, right? So for me, my parameters, the set of parameters I work at, are very important. As soon as one of them becomes negative, I look at the stock, I analyze the stock again, and I exit the stock. Most probably, I'll exit that stock. So that's how I exit the stock. On the other hand, how do you enter the stock? A lot of friends and people that I've met a lot of times tell me that they get some tip or the other from somebody who is doing stock trading, or somebody that they've tried and who gives good tips. My only suggestion to everybody who takes stocks on that parameters is that, whenever you get a stock tip, always analyze that stock on the parameters which I've just mentioned to you, right? Because see, what happens is, a lot of times you generate a lot of profit by taking a tip, but that one tip which will go wrong for you will destroy that profit as well as your capital, right? I've seen it many times. I've seen classic examples of Yes Bank. I've seen Vodafone's. I've seen DHFLs in their portfolios. So whenever you get a tip, it's not bad to get a tip from somewhere, right? But at the end of it, you have to realize that you are investing your hard-earned money into that tip, right? So as long as you have the time to analyze that stock in detail, not just once, but after every 10-15 days, you should enter that stock. Otherwise, you should not. Or you take a help of an investment advisor who can do that for you, right? But don't go on the basis of tips. I've seen a lot of people lose a lot of money. Second, I've seen a very common practice, which is there with almost all the stock investors is, let's say I've taken ten stocks, three of them are going down, seven of them are going up. Investors generally, if they have extra liquidity, generally tend to average out the loss making stocks which they have in the portfolio. By averaging out, I mean, let's say the stock is 10% down, they put more money and make the pricing better at for which they have entered at. I follow a completely different strategy. I follow a strategy of backing my winning horses, right? So
Hmm.
out of 10 stocks, if seven stocks are doing really well, three are not, and I have extra liquidity, I'll probably enter that extra liquidity in the seven winning stocks rather than the three losing stocks. I'll wait for the stocks to come to zero if they can, if they
Hmm.
are negative, but I'll not put in my extra money if they are negative, right? And it can happen that out of 25 stocks, three stocks, four stocks can go here and there. As long as my majority calls are going well, my portfolio will keep on doing well. So that's a second big mistake that a lot of investors do, which is averaging out on the lower end, which I don't. I average out on my winning horses, not on my losing horses.
Okay.
Right? That's just a
Nice.
brief of how to enter and exit into the stocks. Go ahead, Preeti.
Nice. So then there is another question which follow this section, that how many number of stock that one should have in their stock portfolio so that they won't be over diversified or under diversified.
So I feel anywhere between 20 to 35 stocks is a good number. Why I
Hmm.
say that is, if I have, let's say, on an average 25, 30 stocks, I have on an average 3 to 4% on every stock if I decide to equally invest in all the stocks. So even if one or, let's say, two or three stocks, four stocks don't perform that well, uh,
Hmm.
it's only about, let's say, 10% or 12% of my portfolio which is not performing. 85 to 90% of my portfolio is performing. And trust me, that will happen with everybody. Even the best of experts will never give you a list of 30 stocks which are all performing at the same time. There will be some sector not doing well, some stock not doing well. So that's all right. uh, as long as your majority calls are going well, your portfolio will keep on doing well, right? So for me, a 20 to 35 number is good enough. Should
Good
not
enough.
be less than 20, because uh, if you stocks don't perform, then you get a major hit on your portfolio. Should not be more than 35, because then the winning
Hmm.
horses will not generate returns for you that much, because they'll not have individual allocation into them.
True. Hmm. True. Uh, what do you feel that what we say, so number of stocks taken, and you have given a very good point that when should to enter into a stock, when should we exit into a stock. And there are many clients what that they feel uh, to hold a stock, that they know about a company, for say example Reliance, for example Reliance, it's a large cap company, and but what if the stock is not performing say for a year, but because the company is very good, it's been long, the people the company is having a good financials, but it does not perform on the benchmark that they have been set in the past. So do you recommend to hold those kind of stock because they are good in the past, or you recommend to exit the stock and invest somewhere else?
So see, this is another good point which I forgot to mention while entering a stock. A lot of times, a lot of investors and people I know, friends I know, uh, go by a business model of a particular stock, right? Um, they tend to analyze that, let's say this business is good, this business should work, and hence the stock should go up. A lot of times stock markets don't work that way, right? A classic example
Right.
of this are Zomato and Paytm of the world, right? When they got
True.
listed, now Paytm is a very good business model. I mean, not talking about from a profitability end, but from a usability perspective, everybody uses Paytm these days. Even the local chai walas, even people. If you go in a mall, everybody has Paytm wallets with them. right? But if
Right.
if if we go by the logic of a very good business and hence the stock should do well, then Paytm should have almost doubled from here, right? But it has
Hmm.
almost gone down by about 70% by after listing,
Correct.
right?
Correct.
So we should not go by the business model of a company. Lot of times,
Hmm.
even if the business model is very good, lot of times external factors like the FII is moving out of the company, or management not doing well, or management not able to take care of the volatilities in the stocks, right? Or there is
Right.
some sector related problem. So there are a lot of problems which can happen. In Paytm, the case was that it was very overvalued. The stock it got the price it got listed was hugely overvalued, and people didn't realize that, and people invested in Paytm stock. Uh, for me, I always remain away from any IPOs. I do not go for any IPOs. Pretty much very simple rule for my life, uh, because as I said, I need vintage in the stock market. And in IPOs, there are no vintages, so I cannot do much analysis of the balance sheets. Before listing, how their balance sheets were, after listing, how their balance sheets are, is a very gray area, and it's a very debatable area, which I don't want to, say on a public platform. But I would probably give a stock 5 years, look at its balance sheets after that. So I don't go by with IPOs. So any particular investors or anybody who wants to invest should not go only by the business model. It will not work. Some cases it will work. Some cases it will not. So you have to look at business model. You have to look at management. You have to look at tenure, financial durability, valuation, momentum, shareholders, a lot of things before shortlisting a stock. It's not just as simple as shortlisting a business model.
Yeah, that was a very insightful information that you shared, because my next question was on IPO, but that you have already taken. To brief you, the audience, that there are many investors who invest only in IPOs. They feel ki IPO mein, let's invest in an IPO and book the profit as soon as they gets listed, and they have gained that profit also in their pocket. That's why they have believed to go for an IPO. So I would request to throw a little more light on the IPO. Why not IPO? Or if you, like we say, ki, do not invest in crypto, because there is a gambling thing going on. We do not have any back testing data or information to like shortlist a cryptocurrency. So why not IPO in similar way?
So it's very difficult to answer that question on a public platform, but let me answer it in the most sophisticated way I can. Uh,
Sure.
I feel when companies come for an IPO, uh,
Hmm.
the numbers that they come up with, their balance sheet numbers, their profitability numbers, are something which was not there on the public domain before, and it has come on or it was in a public domain, but it was not listed as far as um, a listing company is concerned. Uh,
Hmm.
a listing company has to display everything on the financials on public domains. So I feel the numbers are are not up to the mark, and they need to be analyzed for a few quarters, few years, for them to actually show the correct picture, right? Pretty simply, if I put it. Uh,
Hmm.
Second, I have not we have not seen the stock prices going through cycles, right? How does
Hmm.
a stock perform in a lower cycle? How does it perform in an upward cycle? Uh, if the stocks crash in a lower cycle, then how does the management react to save not just the company but the stock as well, right? What steps they do, what steps they take, if at all, uh, they are listed. uh, when they get listed, the IPO money, how is that IPO money utilized, right? For what are they utilizing that IPO money? It has to be seen, because it's a huge money that has come into the company. uh,
Sure.
so there are a lot of things when company come for an IPO, right? Second of all, we do not get that much of allocation in an IPO. Most of the IPOs have been oversubscribed in India, So it doesn't make
Right.
sense for me to enter into an IPO, first of all, because there is no analysis. It's purely a gamble, which I'm doing. Uh, Gamble, I can go to Las Vegas and put it in a casino also, right? Then why take a IPO? So I don't want to take an IPO, and I don't want to take that gamble. As simple as that.
Thanks for your viewpoint. Speaking of the session, we have covered all the major content that we wanted to cover in this session. Now, I want to request all the participants who have some question regarding their stock portfolio, or if they want to start their stock portfolio, they can put up their question into the chat box, and we'll take up from here.
I think Sifty has a question. Sometimes it happens that financials of the company looks really good and valuations are also cheap, but stock is not able to generate good returns. Should we exit at that time or hold on to the stock? So, as I mentioned, Sifty, when we are looking at the analysis of a stock, what you mentioned are two aspects, which is financials and valuations. We have to look at the technicals also of that stock, due to which that stock is not performing. So for me, technicals of a stock or momentum of a stock is also very important, apart from the first two factors. Uh, so I will look at the third factor also in that stock, the momentum of the stock, the technical of the stock, and I'll also look at the shareholders or any bulk deals which are going out of that particular stock. So there can be investors or FII money which is flowing out of that stock. So I look it into that as well. After which I'll take a call. If the third and fourth factors also, which I said, third and fourth factors are negative, I'll probably exit that stock and not hold on to that stock. I'll exit that stock and move into something better.
Thanks for the answer, Mr. Abhishek. Till other participant put their question, I have a question from you that there are some star investors like Mr. Chunjunwala and many other people who do the bulk deals. So when I do my when I select a stock, I follow some of the star investor. So if they have taken some deal and I follow the same, but the percentage of return that they earn, I do not earn that much. So, what do you suggest to me as an investor?
Again, you're asking me a lot of controversial questions, which I should not answer on a public domain. Uh, but I will try to do it again as sophisticatedly as I can. Uh,
Hmm.
so see, star investors are very close to the market. They have a lot of news, a lot of advanced news already about a lot of things. So their stock picking will, all of them will never make sense to you, right? Because they are
Okay.
very close to the management. So if I look at any star investor and I look at its portfolio, I probably will shortlist one or two stocks from, let's say, the 150, 60 that they're holding, and probably not that also in sometimes. The reason for that is the parameters which I mentioned. Generally, those stocks don't fall into that parameters. Uh, but at the end of it, they have some kind of a news and information which can benefit them. But the timing of it is very important, right? It has to be precisely timed, precisely at what time you enter, at what time you exit, and you can't time that at all, because by the time they would have exited, your stock would have hit a lower circuit on that particular day and your profitability would have gone, right? So you cannot replicate the portfolios of superstar investors. But yes, after you have done your analysis, which I've told on the stocks, after that, if you want to put let's say, fourth filter of superstar investors, you can put that. That's perfectly fine.
Yeah. Thanks for your input. We have a question in the chat box. We have question from Mr. Sudeep Das. What are your view on Britannia's industry share for long-term investments?
So, Britannia, I have not analyzed for a bit now, but let me just quickly give a view by checking the share pretty quickly on the parameters which I just mentioned. So Britannia Industries is trading at about 33.47 at the moment. Valuation is a problem for me. So my analysis gives me a valuation score of 13 out of 100, and that's been a problem for almost all the large caps now, not just Britannia, but all the large caps. It was around trading around 4,000 odd in September 21, and it's come down to about 33.47. Then second problem is also the valuations and the momentum. Momentum is also a little bit on an average side for me. Um, Net profits are declining on a quarter to quarter basis, decline in quarterly net profit, decline in profits every quarter for the past 2 years. So, financials are also looking not that well. Degrowth in revenue, profits, uh, high valuation, so price to earning of that stock is greater than 40. So I'll not pick up this stock, to be very candid with you. Uh, Not my choice of stock. So if you are holding on to the stock for a long term investment, uh, as an FMCG, if the numbers improve, I cannot comment at the moment. But if I look at today's picture only, I will not pick up that stock or I even hold it in my portfolio.
Thank you for the input. Coming to the next question, this is by Ms. Varsha Kohli. Would you suggest to invest in LIC IPO?
So on the LIC IPO, I again do not want to enter into an IPO. As I said, uh, I'm against, or as a principle, I'm not against, but as a principle, I do not invest in IPOs. Secondly, the LIC IPO, I feel with the hype that it has, will be hugely oversubscribed. So, anyways, I will not get that much of allocation even if I wanted to, and for that lesser allocation, I would not like to get into the LIC IPO. I'm sure uh, it being the biggest insurance life insurance company in India, it can do well, but I don't know at what valuations they will be coming at what pricing they will be coming at, and plus it will be oversubscribed. So I don't. I mean, I personally don't want to enter into a LIC IPO.
We have another question by Mr. Nikhil Mathur. What are your views on stock related to electric vehicles and related infrastructure? We have been hearing government in planning to develop charging station on the highways, and almost all automobile companies are exploring and developing electric vehicles.
So, Nikhil, on the electric vehicles front, it's a good sector to enter into. But the only problem over there is how much time it will take to develop all that infrastructure and electric vehicles in a country like India, right? It's a challenge uh, to build on this infrastructure. Let's try to compare it with a CNG infrastructure when it started back in India, right? When CNG came in India, we had a lot of problems with the CNG pumps. Big queues in CNG pumps, very few CNG pumps available. So it's pretty much the same as of now, right? As of now, we do not have that many electric vehicles, so we're not seeing the queues at the charging stations. The charging stations are more in number, but to develop this not just inside a city like Delhi or a Mumbai, but also to develop it on the highways will take some time, right? And it's not that easy. To be very honest, for me, I feel that it will take at least the next 5 years minimum to develop a good electric infrastructure, right? Now, whether I want to hold on to stocks, buy stocks today, and I want to hold on for the next 5 years is one strategy, or I do not hold on. I uh, go for different stocks at the moment, and when I feel the electric vehicle expansion or the vehicle dream is much more realistic, I probably enter into it, right? uh, I follow I'm following this latter suggestion. I'm following the latter thought process. So for me, it is doing well. It's coming up well, but it will take a long time for it to get developed in India. So I'm looking at it from a very longer perspective. So I've not taken any calls in my stock portfolio at the moment on electric vehicles per se. I do own a stock, and I can name that stock publicly also because I've taken that. Do have a stock of Electra in my portfolio, which I have taken, but I have taken that from a medium to longer view rather than a very longer view, right? So uh, I'm not designing my portfolio over that, but yes, we can have a little bit. Let's say out of 30 stocks, I can have one or two stocks dedicated to that. It looks to be a good sector in the next 5 years or so.
Right. Thanks. We have next question by Mr. Sushil Sharma. What is the future of Car Trade Tech Limited in long term? Can you share your viewpoint there?
So car trade, uh, again, I think this was when did this come up?
It's on 30th August,
I think
in
August, right?
somewhere
August 21. So
2021.
uh, again, very new company that as I said, I stay away from the new companies and IPOs. I've not even analyzed it, to be very honest. So it
Mm-hmm.
doesn't give me my software doesn't give me a financial analysis because obviously I have a financial analysis picture fed into my software. But if I look at the numbers, June 21 net profit is negative, operating profit is negative. September 21 operating profit is negative, net profit is negative, and they're negative about 40 crores approximately. December 21 again net profit is negative. Again net profit is negative. Making company, the valuation score for me is about 14 out of 100. Until unless their uh, profitability improves, this is not a company that I'll take in my portfolio. A lot of factors don't meet it, meet my criteria. I don't take a loss making company at all, no matter what the scope is. So it's a loss making company, and plus the valuations at even these levels are very high. And the valuations are simply high because their profitability is not there, right? So price to
Right.
earnings, the valuation factor which is there, earnings being negative, the price which is right now doesn't support that. So when until and unless these earnings turn positive for them, I will not look at this stock at the moment.
Yeah, hi Abhishek.
Right.
Can I ask you a question directly? This is Vishal Nigam.
Yeah, you can go ahead. No worries.
Okay, hi Abhishek. So
Hi.
I just wanted to actually take your advice on the HDFC merger. So as you know, HDFC Bank has been kind of a laggard over the last maybe couple of years or so. But prior to that, it has been a stupendous performer. So last 1.5 year has been bad, owing to the restrictions by RBI, the credit card restrictions, and the other restrictions on internet and other things. Now this merger will probably make it a 14 lakh crore company or maybe more, depending on the exact price of the stocks at that moment. How do you take this valuation, and what is your advice for investing in the stock as of now, or in fact both the stocks? Because I see that the pricing for bank, perhaps many people are saying, is not up to the mark. Or there are a lot of challenges actually, but the long-term view might be good. So just your suggestion on that.
So, Vishal, anyway, see, HDFC Limited will kind of merge in HDFC Bank. So, after a few trading sessions, HDFC Bank will be the long-term stock to which will be there. For me personally, see, it's from a bank's perspective, you're right that financial sector and the banking sector should do well, and so does the stock. Um, Believe me, in HDFC Bank, the credit is very strong. Their loan book is very strong. They do not give out loans that easily to everybody. Even the corporates that have working capital limits running with them are good corporates with good financials. Otherwise, they don't take a call. They are the most conservative credit in the entire country, and that is why the quality of their book is very strong, right? So, as a bank, from an HDFC Bank perspective, I don't have any doubts that this stock will do well, right? In the next 4 or 5 years, 3 years as well, won't be I won't be surprised if it reaches close to doubling from where it is right now in the next 5 to 6 years or 7 years, right? But uh, so that's my perspective and a very neutral view. Uh, from my perspective, I will not pick it up in my portfolio. The reason is pretty simple because it doesn't fit in some of my valuation parameters. It's still overvalued, right? So for my particular portfolio, I'll not pick it up. But from a credit perspective, if you want to pick up a bank, let's say, and you want to hold it for 5 to 7 years, there is nothing better than HDFC Bank that you will get, right? Uh, from their financials are very good. Everything is good there. Probably the ROC is a little bit of a concern area over there, but that's not to be counted as a major factor when it comes to analysis of banks. Uh, Only problem is the valuation at these levels, so probably I'll not enter into it. I like to look at few other sectors at the moment. But if you want to go ahead and pick up HDFC, there's nothing wrong with the bank.
No, what I actually, in case you want a banking stock, so probably this is the one because as you said, we need to make a portfolio of around 30, 35 stocks, right?
Yeah,
So out of that, one has to be a banking stock, any which ways, one or two maximum
yeah.
of financial services. So among them, probably HDFC Bank should be good. Any which ways, I think the PE ratio and other things are also quite. I was just studying; it was pretty okay. It's less than 29 as of now.
Hmm. It's
I don't,
predominantly been a little higher. As of now, the PE ratio is, I think, 29, I think, if I'm not
yeah,
wrong. Let me just check on that. But in banks, we don't look at only price to earning, we look at price to book value also.
that's true. Yeah.
So price to book value is a better factor and it's close to 4, which is a little bit higher. It's predominantly, it should be about uh, let's say 2.5, but it's at about 4 at the moment. That's why I'm saying it's a little overvalued at the moment. So I don't want to pick it up at this moment. But yeah, being if you ask about banks, it's a good enough bank. The credit is also good and the book is also good. So I don't have any negatives as such, or there's no reason for me not to pick up. Probably I'm waiting for the valuations to correct a little bit.
So for you, it is a buy and a hold
Yes, you can for a long term, of course.
for a long term. Okay. Thank you so much.
No worries, Vishal.
Uh, we have few more questions that I would request we'll quickly take up before ending this session. So, Ms. Sifty has asked, should we rely on the target price of the stock, which many platforms suggest you for entering or exit in from the stock? Should we rely on those?
Yes, see, I don't work on a target price basis. I look at parameters. As soon as the parameters are negative, I exit out of it. Target stock, the target price which you get on the parameters, you can look at that target price. It's more of an individual perspective. For me, even if a target price is hit, but there is nothing wrong with the stock. The stock is still at a good valuation, good financial durability, good momentum. I don't want to exit that stock at that time also, right? So it's completely basis the analysis that you do. If you do an analysis of target price and you move out of that price, that's your way of doing things. My way of doing things is completely different.
Um, Right. We have next question from Mr. Parikshit Kaushal. He would like to know what about the companies, your viewpoint on the companies involved in PPE kits manufacturing. So should they book the profit now and or remain invested?
Uh, so Parikshit, PP, if you have predominantly invested into a company only because they develop PPE kits, then going forward, I don't feel you will get very high returns from these companies, right? But you can still expect good amount of returns because PPE kits are not going anywhere, right? Probably the local populations, or let's say when we were traveling a few months back in airplanes, we were supposed to wear PPE kits. Probably those will not happen, but the doctors, the hospitals, the surgeons will keep on using PPE kits. So there's uh, no stop on the average growth of that particular company. But if you're looking at opportunities like the PPE kits developers at the time of COVID outbreak, that high level of returns will probably not no longer be there. Secondly, on the PPE kits part, just to answer your questions, can we book the profit or remain invested there? I think you can book the profits. What you can also do on a counter is you can exit completely out of that stock, or just book the profit out of it and let the capital remain there, so that you can at least get an average growth on that particular stock.
Okay. Okay. Thank you.
Right.
Answer my question. Yeah. Got it. Thank you.
There is a next question by Mr. Sushil Sharma once again. Would you suggest in investing in penny stocks?
Penny stocks, like a Johnson Care. So penny stocks are mainly stocks with a very lesser stock price. I don't
Hmm.
look at stocks from that perspective, but which stock is that? Johnson
Johnson Care Limited.
Pharmacare Limited. Okay. This is a 1.41 kind of a stock. Uh, Again, I think this is okay. This has been there from 2006. In 2006, when it got listed, the price was 8.29. Then it went to again 8.81 in 2014, and right
Hmm.
now it's 1.41. Uh, so I don't have a financial analysis for this
Hmm.
on my portfolio, on my analysis, and I am seeing a lot of. I don't know if these numbers are correct or not, but I'm seeing a lot of zeros in even revenue for that matter in my software. Uh, so probably I will stay away from such stocks. See, my basic criteria of shortlisting a stock are the three, four analysis that I shared with you in the beginning of this call. Apart from that, there is no other analysis, right? So there is no distinction or filter of penny stocks. I can take a penny stock as well, but penny stocks also I have a market cap filter. So this is 77.6 crore of market cap, but my filter is more than 100 cr. So probably a Johnson Care I'll not pick up in my portfolio.
We'll be taking the last question from the chat box by which is by Mr. Saurabh Kumar Singh. What lesson we can take from Sri Lanka crisis, and since the price has crashed from the tourism company which account for majority of their forex, is this a good time to identify stocks in that segment?
So again, it's an event which has happened in Sri Lanka. What lessons we can take from Sri Lankan crisis? I feel the Sri Lankan crisis was very badly handled by their government over there, and it was predominantly due to with a lot of debt that they had borrowed from China as well, which refused to restructure the debt. Uh, but see, I will not look at this from an opportunity basis from a stock market's perspective, because uh, I look at fundamentals. So at this point of time, the fundamentals of all these stocks will not be as per my shortlisting criteria, right? So probably at this level, I will not look at these stocks. And generally, if I get an opportunity, let's say if I look at some stocks and I get an opportunity in that sector also. So let's say I have owned a stock and it's done well on all the three parameters, but I've got some opportunity at which I'm buying at a lower cost. So probably I'll take that at that point of time. But at this point of time, I will not probably look at these stocks. Sorry.
Thanks for your input, Abhishek. And there is one more question that I think we can take at last by Mr. Sudeep. He would like to your view on Inventure Grow and Sec Limited.
In venture, I have not analyzed, but I can give you a quick view. Valuation seems to be a bit high, or not high, it's somewhere around the middle. Momentum is also somewhere around the middle. It has corrected a lot, about 6.45 in January to about 3.85 now. Operating profit is positive. Okay. So this particular stock, I think net cash flows are declining, but that's all right. Uh, Let me get back to you because I'll need to do a thorough analysis of this particular stock, right? Uh, I don't want to give you a quick answer and just tell you anything about it because the stock is somewhere in the middle, doesn't have too many bad features, it doesn't have too many good features. But I'll make sure I'll give you an analysis for this separately by, let's say, today, end of the day.
Thank you, Abhishek. Now, and Mr. Sudhi, we can connect with you in person and review a stock portfolio for you and discuss each and every stock if you want to. And by this, we would like.
Before you end this call, just make a note of this particular call, this particular stock, Inventure,
Sure,
Grow
sir.
and Securities. I'll just give an analysis to Sudeep because I don't want to do it in a call over a hurry.
Sure, sir. I have noted that point. And now I, since we have answered all the question and we have almost covered many major points for this session, that was a very informative, insightful session for us. And I hope that was the same case with the participants also. And thank you so much, Abhishek, for joining us and giving your inputs to us. Thank you so much.
Thank you, Preeti. Thanks for moderating, and I thank everybody who joined us today on a Saturday afternoon. Hope these sessions are good for you, are providing some inputs to you from a financial perspective. And if you want us to cover any topic in the given future, you have the contact details of the employees of the company. You have my contact details. Just give us any suggestions, and we can take up that topic in the following financial parts that we do in the coming weeks. Thank you, everyone. Thank you for joining in today. Thanks.